Hello. Hello, ladies and gentlemen. Arts App, Charts and News, episode 24. I want you to smash the like button and most importantly, smash the subscribe button because we got good insight coming in today. So, let's get into it. First thing we're going to do is look at some overbought tech stocks, Tesla and Meta. So over here we have Tesla. 86% rally in the past 27 days. RSI is overcooked with bearish divergence on the daily chart. So, yesterday, Apple, Amazon, and Google released earnings, and as you can suspect, that's going to affect all tech stocks. So, they're in the red today. Tesla, Meta, everything's in the red today. Microsoft's in the red today, too. And it's honestly expected because tech stocks as a whole have been overbought. Yesterday, we've seen a huge shift of money from risk off to risk on. The Dow was red, and the NASDAQ was nearly up 4%. It was the craziest thing I've ever seen in my life. But, okay, what do we think is going to happen? So, I don't know, guys. I'm going to get this out of the way to clean things up. Obviously, this was a point of resistance here. It formed a double top here. And after Tesla touched that point, before any earnings came out, may I add, when Tesla touched that point, it went down. It went down. So, I mean, you can maybe draw a Fibonacci retracement, see if there's any key levels there, which I'm going to do right now. So, Fib retracement. Let's go. No, I don't see any, guys. So yeah, we'll see how that acts. But Meta's in a similar position. Meta's actually on an even bigger rally, 112% in the past 92 days, which is nuts. RSI is completely overcooked. This is another indicator I've been using. It says there's 75% downside potential with 9.4% upside potential. I don't know why upside is red and downside's green. Don't ask me. But so it's in the similar situation in the sense that this was a point of support over here, and that's where it failed, that white line. And that point is also the 38.2% retracement, which is 199.76. The high for that day, if you guys look in the top left, or yesterday, was 197.16. So that's where it failed. Guys, I'm not saying the rally is over because that would be a very foolish thing to say. But it's going to have to break through these levels. And I'm going to show you some more patterns and chart formations that are showing that as well. Actually, right here, I'm going to show you right now with SPY. There's an ascending triangle. So it broke the trend line. Done. That's broken. 200-day moving average broken. Now we have this ascending triangle. And the level it has to be is the 50% retracement level from the 2021 highs in December to the 2022 lows in October. So the 50% retracement, that's actually what it's fighting right now. On top of that, it was also a point of resistance in June, early June. After that, we got a big dip, and then we had a vicious bear market rally. But I mean, guys, look, this was just pullback over here. This is an entire thing is a bear market rally, in my opinion. If we look at it like this, okay, first let's get rid of this fib retracement tool. Okay. Oh, wow, I'm an idiot. Okay. Sorry, guys. Okay, let's go. So that bear market rally in June was 19 to 20% in 60 days. The one we're going through right now is the same thing. It's just a bit longer. So maybe it goes on for a bit longer because we've already had a vicious bear market rally. And I don't know how much longer it can go. But it broke the trend line and now it broke this ascending triangle. We'll see if it fakes or not. Well, it's going to open near here. So if we get more red throughout the day, it's probably going to enter the ascending triangle again. We don't know, guys. But this point, this yellow line over here, is going to be an indicator for the downside if it fakes and enters the ascending triangle again. The Dow is also in an ascending triangle. I drew it out. The red line is the top. I have that red line there because resistance here, and resistance here, and kind of these two as well. Like, it's the Dow is going to have trouble fighting these spots. And it doesn't surprise me now that I see this, that the Dow was red yesterday, even though risk-on assets were extremely high, because the Dow is having trouble with this $34,000 level. It doesn't want to break it, you know? And so we're going to see how the Dow acts there. Let's see. Guys, I want to, we usually look at hourly charts. Let's look at hourly charts. So yesterday, I was convinced we were going to dump after Apple and Amazon just because we were too overbought. And we did, I guess. There's kind of overbought bearish divergence. Not really. No. But it's overbought. And I was just convinced. And this is bearish divergence, I'll tell you that. So I was just convinced. And it ended up happening. Made money off of it as well. Because I told you guys, when I see a clear direction before earnings, I'll pull the trigger. And I did. And Apple missed anyways. And I'm pretty sure only, I think it was Amazon hit on revenue. But all the other data points were missed. But anyways, QQQ now. So we looked at the Dow, we looked at S&P. QQQ, this white line, is actually the 38.2% retracement. Big point with this point of resistance and this point of resistance. So that's huge. So yeah, guys, we're like today and basically next week are going to determine a lot of price momentum going forward, right? And this white line was also support here twice. So we'll see what it does. I can get rid of this square because it's not it's not a supply zone anymore. So I'm curious. Like, if you look at this entire thing here, okay, from here all the way to today has been 272 days. You see that? So that's nearly a year. And only this area has been on top of this white line. So it's going to be tough for QQQ to break this white line. To put that in perspective, it's like 94% of the time in the past 300 days, it's been below that white line. Just something to think about. U.S. oil. Okay, so this is the only thing where I'm going to be like, yeah, you guys should probably think about buying today. Not financial advice, obviously, but it's in a demand zone, and we got bullish divergence. So like UCO is the ticker. It's 2x long crude oil. Seems like it's basically a given that we just fucking go back to this supply zone. Because that's what oil's been doing for forever now. Like, this is the 1 hour chart. Look, it just goes up, down, up, down, up, down. Seems like you guys can capitalize off of the sideways trend. I love trading sideways trends, so I'm sure you guys do as well. Now this, I saved the best for last. This is the most interesting thing I've seen. And I found this looking at charts yesterday. The yields look like they are ready to collapse. This is a weekly chart, let me remind you. So this divergence goes back all the way to last year, like February, March 2022. Look at this. Look at the uptrend. Look at the downtrend. So this is a weekly chart, so it's not like this is going to play out today. It's probably going to play out in a month or two. But this is like basically like a crystal ball telling you like the yield curve is going to correct itself. Because this is the 2-year yield. And the 2-year yield is going to have to drop a lot more than the 10-year yield. And I'll show you guys the weekly for the 10-year yield. It doesn't look anything like that. Like, at all. Look, see, like, yeah, there's bearish divergence. Trust me, it's there, all the way there. And yields are going to crash. Now, the question becomes, are yields crashing bullish or bearish for stocks? I honestly don't know. I don't, because I think it's capitulatory. Like if we see like 2-year yields, 10-year yields go to like 1%, that's probably capitulation. Some money from stocks just moved out of stocks and went into bonds. That makes sense. But like, because that's what happened in 2008. That's what usually happens when stocks capitulate. But god damn, like that yield curve has to correct itself. And it looks like it's on the verge of doing it. I mean, guys, the 2-year yield is at 4.09 and the 10-year yield is at 3.39. That's not normal. That is a very inverted yield curve. And I'm pretty sure the 30 years at 3.54 and the 5 years at 3.48. Okay. I mean, it could be worse, but whatever. Anyways, guys, I'm sure you guys are active on Twitter. You're seeing what's going on with Michael Burry. Legendary Big Short investor Michael Burry issues an anonymous warning after the legendary stock market rally. Sell. He's I mean, I love Burry. I love The Big Short. It's one of my favorite movies ever, but he's wrong. I mean, he's not wrong. He's definitely right. It's just his timing's usually wrong. Like Musk said, he's a broken clock. After a dismal 2022, the stock market has had a red-hot start to the year with the S&P 500 soaring over 6%. Yeah, but Burry's bearish as ever, and I honestly don't blame him because things look really bad in the economy. Rates are up. We have an inverted yield curve. And it's only a matter of time before Burry is right again. But this time, I think, is different than last time because last time nobody thought he was right, and this time a lot of people think he's right, but whatever. Chinese spy balloon. So this was kind of weird. I also thought it was funny that they was spotted in Montana. Like, out of all states you could spy on, you chose Montana. Like, come on, man. Like, I mean, I'm sure I don't think they're controlling it, but it's funny. Like, that's funny. It was most recently seen above the western state of Montana. The military decided against shooting it down in case debris falls. Really? Wow. So yeah, guys, there's a war coming. In case you didn't know, Europe is. So I told you guys that this is a debt-based system that requires constant QE in order for it to work. You need to constantly print money. It's just the point. It's just the way it works. It's very simple. Okay, and Europe's excuse now is to climate change. We have to print money to save climate change. How does that work? I don't know. I don't even know what you can spend money on that would make climate change better. But whatever. That's like the Inflation Reduction Act. Like, we're going to stop inflation by printing more money. Make it up. Make it up, bro. It makes no sense. And then, but this is what I think the big nuke is going to be. Nuke, that was kind of a pun intended. But, like, is going to be the war. That's how they're going to get QE to just blow it out of proportion. Maybe a nuke. I don't know. I hope not. A nuke would be just... that would be so sad. It would just show how greedy and evil this world is. But Tim Cook, Apple CEO, weighs in after disappointing first quarter revenue. I just thought this was funny. So if you guys look at what it says here, America is our home. We want to do as much here as we can. We have an advance. Like, that is such a lie. That is such a lie. They don't care about America. All they care about is Apple. The corporate giant Apple. It's like Apple is its own government. Like, screw America. You guys got to remember, this is a $2.6 trillion market cap. That's more than most countries' GDPs, right? And they don't care. They'll operate in China, cheaper labor, more profits, whatever. Apple CEO Tim Cook weighed on in the company, reporting some financial results below estimates and its hiring in an interview Thursday, the day the company put out its first quarter earnings. Yeah, they missed, bro. Like, they missed. Charts predict news. I seen charts were going to go down. I bet on them going down, and they went down. I don't care about the earnings. Meta's earnings were mediocre at best. In my opinion, they were dog shit. And they soared. They went up 20% in a day. Okay, so I actually still don't know how that happened. But anyways, guys. This was a long video. I'm sorry. I did a lot of stalling and like being an idiot, but whatever. Okay, just make sure you guys like and subscribe. And peace. We'll see you next time.